your boy Keys. Welcome back live on Apollox. I'm going to be looking at decentralized assets, dTokens on DeFiChain. Take over remote. So, guys, your boy Keys. Feel free to like, share this video if you find it beneficial. So, also recommend you click on the red subscribe button beneath this video, and also turn on the notification bell so you get notified whenever we drop beneficial uploads. It says D tokens new decentralized assets in crypto. So D tokens or decentralized assets are a new form of crypto investment on the DeFiChain blockchain. So D tokens can be minted by anyone via taking out a decentralized loan collateralized by crypto. So holding D tokens does not mean you hold or own the underlying asset. You can buy and sell D tokens on DeFiChain DEX, put them into liquidity mining, or participate in arbitrage trading. The tokens in crypto are nothing new, but what if you could have greater access across different financial asset types like stocks, ETFs, and even commodities? The DeFi chain's newly launched decentralized asset may be your answer. Decentralized assets or D tokens are an entirely new form of crypto investment, unlike traditional assets which are issued by companies. D tokens can be minted by anyone with DeFi blockchain, DeFiChain blockchain, and traded freely. To know that holding of D token does not mean you hold or own the underlying asset. So using Tesla stock, for example, Tesla D token will utilize the same ticker symbol TSLA. However, because D tokens are minted on DeFiChain blockchain, the decentralized token for Tesla would be named D Tesla on the blockchain. Again, holding D Tesla does not mean you hold TSLA stock. D tokens do not track the price of the underlying assets. Their prices are after minting as determined solely by supply and demand on the DeFiChain blockchain. This launch has made possible new use cases for D tokens like asset creation, arbitrage trading, and liquidity mining. Currently, D tokens available are mostly decentralized crypto, stock, ETF tokens. They have the full list there. So you check out the full list. So how to obtain D tokens? There are two ways to obtain D tokens. You need a DeFi chain wallet for both options. You could buy D tokens directly on DeFi chain DEX. You could mint D tokens via decentralized loans collateralized by crypto. So to mint, you will have to lock up some DeFi chain native token as collateral in a vote on a blockchain. There is an option to add up to 50% of the collateral using a second token. Price oracles, which aggregate and track a number of variable factors, determine how much D tokens you can mint in exchange for the amount of collateral in your vote. So this minting price would be close to the reward price of the actual asset. Once the D token is created, its price is no longer determined by price oracles, but by demand and supply on DeFi chain DEX. So how do you earn with D tokens? Would to invest is a major one. The simple way to earn would be actively trade D tokens on DeFi chain DEX. You can earn on price differences. There's also liquidity mining. You can also earn returns from D tokens and liquidity mining available on DeFi chain DEX. These are some of the screenshots of liquidity pools on DeFi chain website. So do note that D token liquidity pools are powered by DUSD. As a second coin pair, DUSD is a D token and is a stable coin tied to the value of US dollar. This means that if you want to put DTSLA, the Tesla, into a liquidity pool, you would need to have DUSD as well. The main risk of liquidity mining is permanent loss. In liquidity mining, a pool with an equal value of two tokens is created. When people trade much more on one side of the pool versus the other, you could end up with an imbalanced pool. The price of a deposited asset changes as compared to when you first deposited them. So losses are likely to equalize with DeFi chain's high annual percentage rates. Currently, however, you should know that APR rates are dynamic and can fluctuate. Always do your due diligence and confirm the rate before allocating your funds to the pools. They also have arbitrage trading. So because of the arbitrage tokens launched only recently, there are many arbitrage opportunities as token prices depend heavily on demand and supply. So prices of tokens become cheaper or more expensive as liquidity gets swapped on DeFi chain DEX, allowing you to mint or buy low on DeFi chain and sell high on a centralized exchange and vice versa. You could also arbitrate these liquidity pools on DeFi chain and more. So you need to know it is newly launched. So why the USD is a stablecoin, it is newly launched and was trading around $1.3 as of this time. The USD will need a couple of weeks before it is arbitraged out and trends towards $1. So these tokens are definitely something to explore if you're looking to something different. However, the tokens are currently only maintained on DeFiChain, circulated within the DeFiChain ecosystem. Cross chains are not supported at this time. You should closely follow DeFiChain's development and news if you intend to jump onto them. So guys, that's all. There's some useful links you want to check out, a guide to creating them and more. It's your boy Keys. Stay tuned for more. Stay subscribed and peace out.